All right, good morning. Let's go over today's trade plan. So in Friday's recap video, I talked about how the market stopped around 1874 heading into the close simply because the exchange was closing. There wasn't really, from a technical perspective or the way that we look at the market, there wasn't really any reason for price to just stop there. And heading into the overnight, the expectation was that ES would continue heading higher and probably test the 80 half to 82 half, 83 area, and especially if NQ took out its HVN at 35.50, which it did in the overnight session. So the upside scenario, short term, has played out in the overnight session, and right now, heading into the open, we know that buyers are in firm control. From this point on, it looks like ES is setting up for a test of the all-time high. The Dow index made a new high last week, and YM, the mini Dow futures contract, pushed to a new high in the overnight session. So right now everything is looking quite bullish. The volume is running below average, and we don't really have any major, economic catalyst that can, put in a wide range on the day. But right now we're only like 11 or 12 points away from the all-time high. So on the day time frame, we could just kind of slowly, maintain that buy-side direction and just continue heading higher. It doesn't mean that it has to go there in a blast, and it has to just put in a huge breakout move all the way up to 92 half. But the pace can be slower because of the below average volume, but eventually it can still make it to 90 half to 92 half. And for that reason, above 81.75 especially, we want to be careful shorting this market. Right now we do have that short-term upside conviction in this market, and it doesn't mean that the market will not rotate at the resistance zones or pull back a bit, but right now, I'm not seeing anything that's saying we're going to get an all-out failure, especially if we break above pre-market resistance. So right now the main focus is going to be on capturing upside moves. The only time we'll switch our bias is if the market starts really crashing lower on higher volume and high momentum and breaks below at least the initial support zone, 74 to 76 half. So as long as we're holding above initial support, buyers can maintain control, especially if we're holding above 78 quarter. Buyers can be in firm control, and we can head up to at least 86 to 87 half and maybe rotate there a bit, and then eventually go up and test 90 half to 92 half. Now we don't have to necessarily break to an all-time high today, but it's certainly possible. So let's keep our mind open in that scenario of just continued upside. On the downside, like I said, unless you get like a big failure bar on higher volume, this can just balance here and then just continue heading higher. The first red flag would be a break below 74 to 76 half, break below the previous close. That would bring the HVN at 70 half into play. So short term, a break below 74 would tell us that there's some weakness in this market. A break below 70 half would bring the 64 to 67 bull bear zone into play, which is pretty close to the bottom of this short-term balance area. And responsive buyers can be active at 70 half and at 64 to 67. Now, this is the low probability scenario, is crashing lower. But in the event that we break 64, which again is not expected, but it's just good to be prepared, for multiple scenarios. In the event that 64 goes, then you could get liquidation. But considering we're running on below average volume and we have some directional conviction in the upside here, it seems very unlikely that we'll go all the way down. But this market has been a very two-sided market, so it's important to be open to the other side, but not weigh it so much, right? Just kind of know that, hey, this other scenario is potentially possible, but don't really focus on it until the market starts showing some very clear signs that, yes, the downside is in play. But until then, I think, be careful on the short side, focus on, finding good location to enter long, and just keep in mind that it's below average volume, so the character of the market could be a bit choppy, a bit slow. Um, it might take more time to hit your profit target. It could chop around. So, if you're buying too high, or if you're buying like, a breakout too late into the move, you may have to sit through some chop to get anything out of it. So be mentally prepared for that. And if you don't want to sit through it, then simply skip the trade, right? So as long as you know what you're getting into, it's a lot easier to sit through chop when you're expecting a little bit of back and forth. But if you're thinking, no, this is just going to blast off, and then it starts chopping, then your mind starts rejecting it, and it becomes painful to hold a trade. So if that's not the type of trade you want to get into, then simply wait for a pullback where it's hitting a short-term inflection point where it'll give you a good price edge right away, or just stay out of it, right? Because right now, given the below average volume, I'm thinking the range on the day could be limited. Now it could be limited to 10 points to the upside, or 10 to 14 points, but maybe we get a little pullback and then we head higher. But overall, the environment when we're running on low volume is a little bit slower. The pace is a bit slower, and the way that the patterns play out are a bit slower. So just if you're mentally prepared, it makes it easier to avoid getting in too late into a move. Avoid some of those trades where they're just kind of sitting at your price and not really making a move one way or the other. So, just something to be aware of. Definitely be aware of, the intraday context. Volume picks up and momentum picks up, then we can adjust our execution. But, for now, I think conservative execution makes sense. So heading into the open, buyers in control. In the other markets, in NQ, we want to see it holding above like 35.58 to 35.61 at this point. That's the overnight breakout area in NQ. And then below it, 35.50 is still a major HVN. You could almost say that's the equivalent of like the 70 half in ES. With TF, similar story. Now we know that TF has shown some more weakness compared to the other markets, so there could be a little bit more of an extended pullback in that market. So, just because we get a pullback in TF, we don't want to switch our bias because we know that's been a bit weaker. And if that market really starts taking off, then that also tells you that, the buyers are in firm control here. So if it starts holding above like, the 1108 area, which is the overnight breakout there, so 1108 to 1109, then that would tell you that, the buy side is in firm control here. And we could just continue pushing higher throughout the session. So those are the main ideas heading into the open. Let's see how well the buyers are able to hold it above initial support and the overnight breakout. And we'll take it from there.